Hello, this is Coach Mike from winningstockcoach.com. Going to get started with my weekly market overview video for the trading week ahead, the week beginning June 22nd, 2015. Over the past few weeks, actually past month or so, we've talked about a retracement on the S&P 500 that, I said to watch within a 0.5%, 0.5% of this 2076.73. Over the last couple of weeks, we've had a nice hold of that. We did have a bit of a decline into a double bottom early in the week, but has since kind of moved forward and, really kind of at least at first putting us in line for our first target point, 2138.93. Now I want to go over to my daily chart and I want to show you a little bit of what we got here. This is that double bottom I was talking about early in the week. We had our open and then we came down. Actually, as the open here for the week, came down, held this double bottom area, really straddled right across here, and then ended up on Thursday doing what's called a W pattern. Obviously, you see the left end of the W, the center. You come down, you make the little 2 points. It looks like the letter W. Well, there's 2 points you look at to buy off of a W pattern. You have the short-term momentum trade. Now, the momentum trade, you never know how long it's going to last. You can't even predict how long it's going to last. Anybody that tells you can, well, they're stupid. But it's quite frankly, as I say, a Momo trade ends when the Momo is no mo. It's a short-term trade on the first breakout until it starts to pull back. So that's where you get your day trade for boom. The second place to buy on a W pattern is when it retests the W. Should it make a positive move from it? People that think that trading's about trying to calculate the exact low and exact high, either they miss every trade or they're wrong every time, so I don't much follow them. Now, on the W pattern, any W pattern, your first target should always be the highest close after the start of the fall. Well, here was your start of the fall, right here, and your highest close was 21.2606. Your W actually hit right into your target. It went a little bit above, but if you were simply targeting the highest close after the start of the fall, you got your sell on your W pattern and very, very near the top. Then you were able to wait for this retest. And like I told people in our chat room, the members of the Coaches Roster newsletter, Thursday we had discussed what our probabilities were to happen. And I spoke very highly of the probability I believed would happen would be a retest of the W. But it wouldn't be something we'd want to buy at the low and hold over the weekend. All we wanted to see is if on Monday we go up above this line or down below it. And trading is made very, very easy based on what it does here. If it goes back up above it, then we continue our swings to 2138.93 target on the S&P. And if we go below this line, we need to consider a short trade down to this multiple bottom. And then should that 2076 target area be lost, be looking down around 2022. Very, very simple trade plans to be made off of the chart patterns right here. It's had me really, really excited because, for you that are watching this video that are members of the Coaches Roster, for the several weeks into the decline, all through this, I said, let's not go long on this bounce up. That's a day trade. We're going to fall again. And sure enough, we did. And we spent weeks planning out the trades we would enter and how we would go about entering them. And we've been quite successful in our trades for it. So as we look at the S&P 500, it's very, very simple. Put your line in the sand. A close above this line tomorrow verifies a positive move, holding of that support. A close below, and the long is over, and then you have to go with what you see at the weeklies. If the rise is over and it starts to fall, that gives us a lower high. But if we continue to rise here, we've got plenty of room to continue our swing. Over now to the DJI, that's the Dow Jones Industrial Average. Very, very similar on the weekly chart to what we talked about with the SPX. Let's go over and take a quick look at the daily. You actually see that W pattern was failed on the DJI. Now, if you guys remember, over the past couple weeks, I actually have mentioned the DJI and specific DJI stocks as the most bearish of the other indices, and that it was quite possible that any up moves over the past couple weeks could actually just lead to short opportunities on the DJI. Stocks like Apple that fell apart hard on Friday. Let's go over now to the RUT. This is the Russell 2000 chart. Now, if you remember my market overview video for May 11th, then you may have made a superb trade that was specifically put out in the May 11th market overview to trade off of this reversal to a 1287.52 target. And like I've always said in the videos, we're looking for a plus or minus 0.5%. We surely came so far within 0.5% of our target point. And if you made that trade, congratulations to you. If you didn't, keep watching these market overview videos. We've been accurate now, 59 market highs and lows within 0.5% on this weekly video. Pay attention, it could make you some money. On the RUT, really simple. We do have some higher, longer term targets that, should we break through that shorter term target point, we could very well hit 1332. It's a possibility. But when managing the risk to reward of it, plain and simple at this point, your support, 1267.54, watch your small caps. If you're trading small caps and you allow it, the RUT, to get below that 1267.54, you're probably going to find that your small caps are already retracing farther than you may have been comfortable with. Now, you could also watch, if you make an exit on a pullback from this target point, for that to hold as support and enter again for continuation should it hold the support and make a positive move from. Now over to the NDX, the NASDAQ 100. Couple simple things to look at. We got kind of a double bottom here. We've got a triple top right here. The NDX needs to break over 4536.78. Plain and simple. It needs to close a week above the highest close to show us that we're not just banging our head against resistance like we did over here. We don't want to buy at this point because twice already it has fallen from this point. We need a break above it to say, hey, I'm no longer going to be held down by this resistance point. But also, as you can see, at the conclusion of the week, we had hit that target point and pulled back from it just a tad. If we continue that pullback on Monday, you have a short-term / day trade into the multiple bottoms. As you can see, it's only taken a couple days to get down here. If you're using options, you could trade the Qs. You could trade the following week's expiration and be able to safely hold at least overnight for 1 to 2 nights to at least just replicate this little fall. If it's going to fall more, your profits from the higher volatility short-term trade would pay the difference easily on waiting a little longer to take the longer-term trade and having to pay a little bit more for it. It's a very simple type strategy to use. Short-term trade into your confirmation. Long-term trade once it's confirmed. Yes, you pay more for the long-term trade, but if you short-term trade into the confirmation, the profits on that shorter-term trade, especially being higher volatility, allows you to pay the extra without being worried about it. This is Coach Mike from winningstockcoach.com. Want to say a special happy Father's Day to any fathers out there. And wish you the best of luck on your trades in the upcoming trading week. God bless.